The rats continue to flee the ship. So the big story, as most of you probably have heard, is that the LBMA, the London Bullion Market Association, has decided to shut down the London silver price fix as of August 14th of this year. So after August 14th, there will be no more London AM and PM silver price fix. So why this is important is it is, number one, it's validation of everything we have been saying at Smart Knowledge U since 2006, that silver and gold markets are rigged. So since 2006, even up until last year, we still have to contend with the hundreds of trolls that are always trolling our videos, are always trolling our articles online, saying you're a conspiracy nutter for saying gold and silver markets are rigged, whereas those ad hominem attacks are just attacks of the weak-minded people, because they never address facts, because those people that are basically bank shills, global banking trolls, they want to appeal to people's emotions by saying you're conspiracy nut job or you're tin foil hat wearer, and they never can argue facts, because when they argue facts, they are destroyed. So they're the same people that want you to think, even though it's already been proven that there's been massive rigging of utility rates in America by JP Morgan. There's been massive rigging of LIBOR rates by a whole slew of banks. There's been massive rigging of Forex markets. All this that has been proved because these banks have paid off billions of dollars of fines to basically, which are a joke anyways, because the fines don't really serve as a deterrent, because it's just a small portion of the massive profits they've raked the citizens of all nations around the world by rigging these markets and fraudulently stealing money from people. But these are the same people that will look at the facts where these banks have admitted they committed fraud and rigging all these other markets, but no, the gold and silver markets are clean. So the fact that the London silver AM PM price fix is being shut down after August 14th is, I believe, it is a result of the German regulator that has some cojones, unlike the spineless US regulators like the SEC and the CFTC that do nothing. The CFTC that spends 7 years investigating JP Morgan silver manipulation and can't find any, even though there's a heaping mountain of circumstantial evidence greater than Mount Everest, and they can't find anything. So the German regulator that actually has some balls, named BaFin, is really going after a lot of these banks, and they have already interrogated a lot of Deutsche Bank employees, and that is the reason Deutsche Bank has actually given up their seats. On January 17th of this year, they announced they're going to give up their seats on the on the London Gold and Silver Price Fix Committees. Of course, the London Silver Price Fix Committee is being shut down in August, so that point is moot. But they couldn't even find people to another institution to buy the seats they're giving up. Now, normally you would be eager as an institution to buy those seats because you have an enormous amount of power in fixing. It's exactly what it sounds like. They fix the price of gold and they fix the price of silver lower. So if you know that, for instance, gold and silver prices are going to get slammed by 2% a day, you can basically open up a lot of short positions in the gold and silver futures markets and make billions of dollars within hours. So it's a very powerful position. So why wouldn't Deutsche Bank be able to find anyone to buy those seats? It's because they know that there's finally a regulator with some balls, the German regulator BaFin, that's going after these people. So by taking those seats, basically their criminality is just going to be exposed, so they don't want them. So the other interesting thing is Deutsche Bank also is getting rid of the employees. I mean, they say the employees resigned, but I'm sure there was some deal worked out where the employees that were responsible for the gold and silver price fixes in Deutsche Bank in their precious metals departments are leaving the bank. So one left in January, very important employee. Let me see, actually, I think I have the names here. So let me find it for you. Okay, so January 17th, Deutsche Bank announced it was going to quit the gold and silver price fixing in London on the London committees. And then 3 days later, Matthew Keane, Deutsche's head of precious metals, resigned from the bank. So will silver rigging and will silver explode in price after August 14th? Probably not. I may expect a good amount of appreciation at some point, probably towards the latter end of this year, in silver prices, or at least the second half of the year, which is coming up. But will it explode after the London silver AM PM price fix is closed down? No, because bankers are much smarter than that. They know, so they have been preparing other ways. And in fact, you can go look at the video. The link, again, I'll post in the video description below, that says, let me look at the title again real quickly. It's called The Real HFT Story That Frightens Bankers to Death. And that is a primary mechanism to rig gold and silver prices, is by selling paper gold and paper silver futures using HFT algos to basically cause all the stops on the futures markets to be triggered, and to cause waterfall declines by pulling bids and by quote stuffing. So all that I discussed in that video, that's their primary mechanism. That will still exist. And they also have other mechanisms, of course, because as for those of you that have been following the US dollar, as soon as it touched down the multi-year support level, it ramped straight up in a straight line. So that manipulation of the Forex markets of the US dollar is clear as day. So they have all kinds of other means they use to suppress the price of gold and silver. Now, someone asked a question, I haven't addressed it yet. Actually, I have a new LinkedIn forum. So we just launched it 2 days ago. We're gonna cap it initially to 100 members. So if you want to join, go look for the Smart Knowledge U Wealth Preservation Gold and Silver Forum and apply to be a member. And we have a group administrator that will go through, review everyone, and then select people for membership. So that's another area we're going to be discussing topics like this. So if you're interested, please go up and sign so you can get on board before we cap the membership to that group. So basically, there's all kinds of other ways the bankers will still use. So the trolls will come out again if silver doesn't explode higher after August 14th. They say, hey, look, the London silver price fix was closed, and now like silver's not exploding. If that doesn't happen, then they say, look, all you conspiracy nutters and trolls are wrong. But it's much more complex than that. So again, I'd be happy to debate any of these trolls, you know, in an open debate, but they will never face debate because all they can do is launch ad hominem attacks that have zero basis in logic and 100% basis in fallacy. Now recall, it's the same employees from the same banks that are rigging all these markets all the time. So the same banks that were accused of, not only accused, but proven guilty of rigging the LIBOR markets. Barclays, United Bank of Switzerland, Deutsche Bank, Societe Generale, they were fined by the UK regulator, the Financial Conduct Authority, over $2.3 billion for rate rigging. Now these are the same banks that are also involved in suppressing the price of gold and silver. So let me tell you who these people are. So the last, by the last account of the LBMA, the 10 most recent directors and backups of the London gold price fix are as follows. Vincent Domian. And he was the head of precious metals trading. Again, it's Societe Generale. Xavier Lanegrace, I believe. And he, again, was a director from Societe Generale. Dave Rose, who's the managing director at our favorite drug laundering bank, HSBC. Then we have Peter Drabwell, who's a precious metals sales and trading specialist, again, at the drug laundering bank, HSBC. Simon Weeks, managing director of Scotia Capital. Stephen Lowe, managing director of Scotia Bank. Martine Whitehead, Managing Director, Global Head of Mining and Metal Sales at Barclays. Jonathan Spall, Product Manager, Metals at Barclays. Matthew Keene, Senior Vice President at Jefferies, LLC. So, I also want to mention Simon Weeks was also the wanker that came out at the end of last year, 2013, and he tried to say, well, he didn't try to say, he said gold was going to absolutely collapse in 2014. At the time, gold was trading at $1,200 at the end of last year. He said it's going to collapse by another 33.33% and go to $800. So remember, he's the head of capital at Scotia, Bank of Nova Scotia, Scotia Capital. So when gold does not get anywhere close to $800, why you would do any business with a bank like the Bank of Nova Scotia? Not to mention that there would be a huge conflict of interest because he was the chairman of the LBMA, the London Bullion Market Association, for 4 consecutive years between 2002 and 2006. So, and then he's trying to sway the market by telling you this bogus propaganda that gold is going to collapse to $800 an ounce in 2014. So when that prediction comes nowhere close to materializing this year, then he's the head of capital markets at Scotia Macata. So why would you ever want to do any business with such a fraudulent, deceitful bank like that? Now, I just read you the directors of the London Gold Price Fix. Now, it's really interesting because when I tried to Google search for pictures of these guys, even though they have some of the most prominent jobs in the entire global financial industry, some of them, there's not even a picture of them. They're very secretive about their identity. They don't want people to know who they are. And others only have like one photo that I could find. One. And it's not even a clear photo. It's just like a headshot and a tiny little GIF or JPEG image. So obviously these people, even though they hold some of the most prominent jobs in the entire global banking world, they don't want you to know who they are and what they do. But let me also read off to you the names of the committee, basically the management committee of the London Bullion Market Association. So here we go. Now, these people I just showed you, in particular the members of the London Gold Price Fixing Committee, are integral. They're not the only players, but they're very integral to all the gold price and silver price suppression schemes that have been enacted during the whole part of this gold bull run that started in 2001. When gold was about $250, silver was about $4 an ounce. So why this is important is because these are some of the people that are responsible for the economic misery all around the world today as well. Because there is a direct correlation between QE, the ability of QE, which basically is currency purchasing power destruction and wealth destruction. So there's a direct correlation between how much QE a central bank and how much of your domestic currency your central bank can destroy, in essence, which turns out to just destroying your savings. To what degree they can destroy your savings is related to keeping gold and silver prices low. Because if gold and silver prices keep going up, 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 people dump their paper currencies, they lose their confidence, and then the Ponzi scheme of fractional reserve banking cannot continue. So if you look at periods when there was a gold standard in history, I'm not talking about Bretton Woods, which again was a fake gold standard, it was a fractional reserve gold standard. I'm talking about real periods of time in U.S. history when there's a real gold standard. It was, you saw the most economic growth ever during this time and the most price stability ever, meaning there are periods of 100 years when you look at the prices of goods and services and they remain nearly constant for like 100 years. The same can be said when you look at true periods of time when gold was money in the UK as well. So all the propaganda that the banking shills like Krugman and Rubini want to tell you that gold standard would restrict growth. If you actually look at the real history, you'll see that during a time when gold was money in the US experienced the most positive, organic, sustainable economic growth in the economic history of the United States. So, the fact that there are millions of people in every country now losing their jobs, millions of people now can't afford their homes and have to rent. That's why rents are skyrocketing right now in America, because there's all these people that can't afford to buy homes or got kicked out of their homes by the terrible economy that men and the women I just showed you like help create. Then these are the people that are to blame for a lot of the mess we are in today, because they have no conscience. Okay, so I never ever, if you look at any of my videos, I never ever advocate violence as a solution. So there is a peaceful way to kill fractional reserve banking, return the world to sound money, which I've discussed and I'll put in some of the videos below. There's also a peaceful way to handle these immoral bankers as well. And if you look at the video title, the video I produced several months ago, hashtag AskJPM Fiasco provides blueprint to rein in criminal banking behavior. That's what you can go to look to peaceful solutions to solving the current economic mess we are in. Because I always believe in maintaining positivity, because there's a negative way you can accomplish something, but I always find the negative ways like violence do not lead to sustainable means of change. Whereas if you exert change or you force change through positive measures, then that change becomes sustainable for future generations. Okay, so thanks for watching, and as always, remain intensely curious. So long.